Welcome to today's Q2 Q&A with medtech simulations firms Mentice. Today we have with us CEO Frans Venker and CFO Ulrika Drotz. Great to have you back on the show.
Thank you.
Thanks for having us, Eric.
It's been a very, very exciting time, and I thought we'd talk about three of the main topics. First off, you have the Q2 results. You also have a rights issue that you announced today. And I thought we'd finish off talking about the future of Mentice. So let's kick it right off with the Q2 results. Frans, it's been a very exciting and action-packed quarter. What are the main key points that investors should be looking at?
No, it is a lot happened this quarter, and that's first of all from a business results standpoint, but also what we did internally in the company. Yeah. So first of all, looking at the results, order intake as also the revenues, in the range of 63 million from a revenue standpoint, 57 from an order intake standpoint. And what we see is that specifically order intake, on a rolling 12 months was approximately 3% down compared to the previous quarter. And it shows also the cautiousness in the market, but actually underlying what we see is that we did quite well in the United States as also the EMEA market, but that APAC is not where we want it to be. And that is the lumpiness of the market, but also to see how we can back to growth in that area. But internally, it was characterized by a lot of organizational changes that we implemented. So we announced this in June, that we would do a strategic, what we call realignment. We took 18% of the workforce out of the organization and focused on new strategic growth areas, also to reduce costs, but also to focus on new resources and growth areas. And that really helped us to set it up for future growth. And I'm happy to announce that it has been already approved and implemented from July onwards, so that will also impact again already from Q3 onwards our results. So an impactful quarter, which we had. Anything I missed, Ulrika, which you would like to add to it?
Maybe when you compare with last year, Q2, we must remember that was the so far all-time high record quarter on a net sales and profitability level. So it's a tough comparison with last year.
Yeah, it is tough looking back, but I think that's what the market is doing right now. So let's look into those numbers, see if you can walk us through them. So sales and orders are down. Order intake was 57.5 million kronor. That was down 19% from the record quarter a year ago. Net sales 63.4 million kronor, a decrease of 37%. Looking at the numbers, what more can you tell us? What's going on?
Go ahead, say that you first.
I think we always say that we look at our business on a rolling 12 months perspective because we have large orders coming in, let's say irregular, not tied to specific quarters. So when we look at the rolling 12 months perspective, as you mentioned, it's down 7%. And this is so clearly tied to the cautious market within the MDI segment. And when you look at the quarter from a adjusted EBITA level, when we take out the cost for this strategic realignment that we have done that Frans talked about, we see that we are making a quarter that is more or less EBITA flat. And I think that comes from all the actions we're taking to be cost conscious and also with the things we're doing to actually emphasize growth going forward.
And to that point also, we are working as Mentice with 27 out of the top 30 medical device industry partners. And they really basically reward us for being unique with our realism and the ability to really simulate procedures in a unique but almost close to reality effectively way. And so that helps us also for the strategy going forward to grow in medical device industry side, but also to grow towards the health systems and the healthcare systems market. And that is our focus also strategically in order to drive that. And that has been initiated also from a growth standpoint. So order intake, what we saw was a little bit down, but we also saw a lot of orders actually moving from Q2 into the second half of the year. which simply is a reflection of the cautiousness in the market,
Yeah.
but the strong commitment also from those companies towards us in order to make sure that they are coming in later in the year. So it's solid activity, I would say, what we see from an order intake standpoint, but also activity in order to drive the funnel towards orders.
Yeah. And in this reorganization, you talk about it being a strategic change and focusing on priorities. What exactly were the changes made?
It's a few points. So it's first of all making sure that we drove the organization from a cost standpoint in line with the revenues that we have. But also it is related to finishing acquisition and implementing acquisitions and integrating them in the right way towards for future setup. An example for that is physical simulation, where we did acquisition in this space and we have multiple locations also there. In Paris, Stony Brook, and what we have said is that both locations will be consolidated into Denver, Colorado, in order to create a more effective but also efficient organization going forward who can drive physical simulation solutions for our customers. So we have then marketing, manufacturing, but also R&D all under one roof in order to support solutions going forward. So that was, as I said, an efficiency drive, but it is also basically a reorganization in order to make sure, that we set up the right resources again for future growth. And where our unique element is towards realism, so the ability to really simulate procedures in the most real, as I said, close to real way, and that's where we're also investing in from an R&D standpoint, but also in a sales organization and a support structure that can bring that towards our customers. And that's where the focus is going to be going forward.
Have you had to adjust the priorities for the new budget or after the cuts, or has it just been about efficiency?
No, please go ahead.
I think it's very clear that the strategy that we started talking about already in Q1, so this realignment of cost and the workforce and the structure is hand in hand with the strategy. So this is merely an effect of executing on the strategy.
And the focus from a strategy standpoint indeed is going to be focused on 3 areas. So in the short term, really, the focus on the medical device industry market, where Mentice has a unique position at a sit in order. So as I stated, we are working with the majority of the industry leaders, and we're going to continue that, and we want to strengthen that, and not only in EMEA and in Americas, but also in APAC to grow further there. It's the healthcare systems market in order to help institutes and basically large networks with training simulation, but also reducing basically the time it takes for tech or nurses to get up to speed. It also to become part, like Ankyras, to become part of the treatment planning, etc. And then a third pillar, which is more towards the mid and longer term, to support also the medical device industry, start with robotics, in order to help train robots, but also physicians in order to execute on robotically guided endovascular procedures. So it's an exciting space, and we have our strategy defined, and also defining still our strategy in certain areas to redefine how we want to become profitable, as I said, going forward, and to have growth in those areas.
Yeah, growth is clearly the theme now going forward for Mentice. But I thought a few last questions about the results. So EBITA landed at minus 8.1 million kronor, but there were one-off costs for the reorganization of 7.5 million kronor. So actually, the Q1 EBITA a year ago was 24 million profit. Now we're around flat, not the minus in the headlines. Are there more one-off costs coming due to the restructuring?
We've taken the cost in Q2 related to the strategic workforce realignment and the restructuring, so there will not be any more one-offs or reorganizational costs coming.
Okay, perfect.
And I think also to that extent, as I said, we had quite a high gross margin, as I said, this quarter. So you reminded, as I said, that also is close to, or is it slightly over 90%. The cost structure is more in line where it needs to be. So in that sense, so we're lean and mean and set up for growth. And that is the focus also going forward, is getting Mentice to grow. And I think especially with this setup, what we have now, when it comes to the internal organization, as also with the rights issue that we are doing, which is, by the way, very well supported also by our investors, but also by our management and board members. So in that sense, we're well set up for future growth, and that's where it needs to be.
So we've talked a lot about growth, and the rights issue is aimed at growth capital. So you're looking to raise about 10% of the market cap, 32 million kroner, and this will happen during August. What are the growth objectives? What are you looking to do with that new capital?
Yeah, exactly. So the objective of our rights issue is fully focused on setting up the organization for growth and Mentice to grow further. First of all, as I said, it will be supported in order with the cash position. So that's approximately a third. As I said, the rest, as I said, we're going to invest in making sure that we grow not only in MDI, so the medical device industry side, but also on the healthcare systems market. And we do that by further R&D investments into our realism solutions. So an example is that our customer base and our doctors ask for example, to be able to simulate towards or based on an actual patient, so that you can bring in a CT or basically the patient anatomy into the simulator and be able to navigate and based on that anatomy, so that the procedure becomes more effective afterwards. And secondarily, as I said, what we also invest in is related to clinical evidence of our solutions, but also the sales organization going forward. And especially that latter part is very necessary. We see a lot of changes in the North American market. Recently, a new bill was passed through Congress, which will have a lot of impact towards the insurance of patients, and there especially for Medicaid patients, and that will have an impact towards profitability of hospitals. So it is important, or even more important for us, to drive the clinical evidence to support our simulated solutions in order to show how they drive effectively the outcome of procedures, but also how they reduce cost and support how to reduce cost. And that is where the proceedings will go towards, to making sure again that Mentice is going to grow towards the objectives that we have set.
Rights issues are a very interesting time, because that's when you really are out and actively meeting investors in the market. What's the feedback been?
No, it's the feedback is so far good. It's actually really good. So what we see is that it's underwritten very well, almost more than 66% by our current investors. As on top of that, there's also quite a lot of support from, first of all, our board, but also the management, which means that there's full confidence also in the strategy that we have defined as Mentice and the ability also to execute it. So the feedback is positive. I'm really satisfied to see this, and for us, it's full force ahead and making Mentice grow for the future to come.
Exactly.
Yeah, and Ulrika, I'm looking at the cash flow, and I see that during the quarter, cash flow was negative 7.3 million kroner, but the actual cash reserves at the end of the quarter were at over 25 million kroner.
Yeah, that's right.
Can you say anything about going forward? Do you think we'll have to raise even more capital, or what's the outlook?
I think the right issue that we're doing now is, as Frans said, that's partly to fill up the cash for doing this restructuring and the change that we are talking about, and to fulfill the strategy for growth. So that is what we see we will use this money for, and that will be enough for us going forward.
So we are, as I said, from a cash standpoint, we're in a good position going forward, and we do not see a need at this moment, as I said, to raise additional cash. And for us, it's grow. Grow, as I said, that will, as I said, resolve all of it.
Growth, 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 and I think that seems to be the theme looking forward. So let's move on to Mentice in the future. One of the big headlines in the report was regarding Ankyras. And you've updated the product, and it's received FDA clearance in the US and equivalently in Brazil. How important is this for Mentice?
Yeah, it's especially important for our strategy, how we would like to see ourselves to become part of the treatment of the interventional procedure. So what Ankyras does is it is a support software that helps physicians plan their interventional procedure for neurovascular, specifically for aneurysm care, in order to size a flow diverter into the brain and what kind of flow diverter needs to be implanted. It helps then effectively to reduce cost, but also to improve outcomes. And with that, it is very important, to become part of the treatment of the procedure, and therefore also connected towards our virtual simulation. So it's a total solution that we are able to provide in the neurovascular domain, both for medical device industry, but also for the hospitals themselves. And therefore it's such important that we do this. It was a strategic acquisition that we did as Mentice, some time ago. And so, yeah, exactly. And so what we saw is that the uptake in the number of procedures that we see is actually tracking according to our plan. And we're currently also in discussion with other device manufacturers in order to see whether we can have them sign up to even overachieve, the goals that we had there. So our anticipation with this approval or clearance that we received in the two markets you indicated is that this will contribute also towards our basically profitability from Q3 onwards.
And we've talked about a few different regions. APAC has received a lot of attention in the report. I mean, the medical device industry as a whole is struggling in the APAC region. What can you tell us about the region's health and also Mentice there?
So what you see is that specifically for simulation in general, but the whole device industry, is that China is difficult at this moment to operate in. So we see longer procurement cycles as also a market which is difficult to enter. But that means that there are many other places in APAC if it comes towards India, Southeast Asia, as also Australia, New Zealand. And so these are important growth areas. And for us, the commitment is there for the longer term to have impact not only for medical device industry, but also for hospital simulation going forward. And so we need now, it's our focus as part of our review of the strategy in the medical device industry to not only focus on EMEA and the Americas, but also drive growth in the APAC region. And more on that in the second half of this year so that we can turn this around. What we do see is that it's quite a solid funnel that we have in projects that we're working. We have a large installed base also that we could upgrade, and it's working and making sure that we execute on this.
And you mentioned EMEA and the US. What regions are performing well or perhaps lagging behind in the rest of the world?
What we do see is that especially EMEA and the United States, especially if the rolling 12 months towards the order intake is doing well. Okay. And actually there we are growing close to double digit. So that's encouraging to see, especially with the foreign exchange headwinds that we see. So it is making sure that we grow faster even there, but also that we get the other regions also towards growth.
Yeah. Frans, you mentioned the currency headwinds that you've had. Ulrika, what plans are in place to manage the FX exposure, the FX risks?
It's just a reminder that all our sales is done in either US dollars or euros. And we have a combination of costs in US dollars, euros and Swedish crowns. So it's a combination of hedging. And I mean, hedging doesn't take away the full FX risk, but it's smoothing it out. So that's what we are doing for 2025 and towards 2026. And also to allocate cost more to the regions where we have the costs in the currencies. Okay.
And in the report, I read about recurring clients. Those are up 9% on a 12-month rolling basis. Who are these recurring clients and what can we expect going forward?
We've talked a long time about the importance of increasing recurring revenues. And what we see here is, I mean, if we look at last year when we launched the NV Connect and this tied to Ankyras, as Frans explained, this is extremely important for the healthcare system customers. So this is where we see the growth. And we have the growth in the software is bigger and larger than in the hardware, which is what we want to achieve. And we see this growth in both in EMEA and in the Americas region.
And in these regions, I know previously when we've talked, you've mentioned that you've wanted to shift towards larger clients, predominantly hospitals. How is that journey progressing?
So it's at this moment. So we want towards the medical device industry side. Also towards larger clients, as also with clients to go deeper geographically, but also wider within different business units. That's part of our strategy to do, especially with the top 27 that we're operating in. It's the same thing what we would like to do in the hospitals as well. So we would like to become part of basically hospital networks. And so what we did is actually pull a team together in order to define the strategic review and define the propositions in order to execute on this. And we expect more on the second half on the strategy of in order to how we're going to do this. And it will, so once we have this defined, we will implement this then also immediately so that it will drive future growth or growth from 26 onwards. So it's in the works. That's the summary of it.
Okay. And Frans, you've been our CEO for about 6 months.
Yeah.
And school books say that the first 6 months are sort of a honeymoon for the CEO when you mainly go around, listen and learn. And then after 6 months is when the big changes start becoming implemented. If we look going forward, what are your top priorities in the next 6 to 12 months?
Okay, it's first of all, yes, it has been a honeymoon, but a good honeymoon. So I truly enjoy being at Mentice.
Yeah.
So first of all, I'm impressed with the team and the people that we have globally, both from a clinical knowledge, but also innovation expertise, but also how we support our customers, both medical device as also the hospital space. And for me, this is a growth company. So we need to unlock this towards making sure that we get this beautiful simulation equipment into the hands of many more neurovascular procedures to drive impact in clinical outcomes, but also reducing cost. And I'm convinced that we have the solution at hand in order to do just that. And once we do this perfectly for neurovascular, there's nothing that could stop us to do it for structural heart, to do it potentially for electrophysiology or cardiac rhythm management, so other areas as well. So yeah, I'm really positive. So I stay on my honeymoon cloud, or the pink cloud as they call it, in order to turn Mentice towards a growth engine.
Fantastic. On that note, I'd like to say thank you to Frans and Ulrika for being here and talking to us about Mentice Q2 reports and the upcoming rights issue. Thanks so much.
Fantastic, Eric. Thank you. Thanks for having us.
And also a massive thank you to all the listeners. Please ask any questions you have in the comments, and we're looking forward to helping you with these. Have a great day.